Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the Forex market. So in general guys, this week we have absolutely crazy amount of the events. Although for truth's sake we could say that mostly they have some political content because it has related either to what Donald Trump was telling or what the legal acts he has signed. So there were a few purely economical indicators or information, mostly retail sales, PMI numbers and so on. But currently investors are coming to some exciting and euphoria around all the things that Donald Trump is telling and doing. And here we think that we should keep the chill mind and keep a reasonable skepticism on what Donald Trump is doing. Because there are lots of purely emotional components right now in the behavior of the investors. And it's really very understandable why it is happening, because the big players, they do know that the individuals and small traders are reacting correspondingly on the news. And they just use these news headlines to shake the boat and involve the traders in trades that have mostly emotional background. When the dust will settle a bit around all these things that Donald Trump is doing right now, you will see that the fundamental background actually hasn't changed. Because whatever Donald Trump will do, it will not bring them some additional earnings to the budget, and it will not decrease the amount of the debt that the United States has. So from that standpoint of view, we do not see any big changes in the fundamental background. And all this stress talk about the tariffs, migrants, some savings in the budgets and so on, so it remains just big populistic show that's actually counted on some emotional reaction, nothing more. When I see all this stuff, I just think, and it's some feeling that the first Donald Trump term is just continuing. So nothing is changing. The same things were in the previous term when Donald Trump was the president. But you probably remember what actually fruits were. So the spiking with the China has been over with nothing. Some bravado around military operations in North Korea and Syria also actually was nothing. And now it's unclear what really results of the first term was. So currently we're going approximately with the same direction, but the warp around all this stuff is a bit brighter. And the mass media is working on the background that provides the following narratives that if Donald Trump will come, everything will change. So something of this kind. So, and we have taken the skeptical look and the common sense look on the overall background that we have in the current weekly report. And I think you will find it interesting to read some disclosures that we have made there. Now returning back to technical trading. On the common week and probably in the nearest couple of weeks, we need only one time frame. It's actually weekly. Because on the weekly time frame you could see that we're standing in a clear bread and butter trade with a great thrust down. So MACD probably we do not need right now. Although the grabber that might be formed right there is also important. But we will return back to this question later when it will be formed or not be formed. For now we do not need it. And here we need to consider, actually the major question is where the bread and butter could start, either from the 105.70, first fib level, or 107. By all meanings, 107 seems more reasonable in the current circumstances. First of all, by the shape of the hand and shoulders pattern that's forming on the daily chart. with the neckline around this area. Second is, on the monthly chart, we have 107 yearly pivot point that has not been tested. And as market already stands on the way to it, it's logical to suggest the testing of the pivot and maybe some reaction on it. Besides, finally, the 50% level, we know how thrilling euro currency respects this 50% levels, and it stands around 106.95. So by these meanings, it seems that maybe this level seems more probable for a better starting point, but we also will keep an eye on this one as well. Who knows? So the problem stands actually around in details. So how correctly to catch this moment? On the daily chart, we could say that probably 105.70 seems more reasonable, which is because market already at overbought, and it will be another confluence resistance on the way up around 106 area. 106.15, 106.46 is also confluence area, which market will have to break it if we suggest that it should go to the 107. Recently, first confluence already has been broken. Divergence here suggests that it might be taken out of this top, which is also point on the high standing levels. So it's a bit tricky moment. But in general, our strategy remains the same as always. When market will reach the next level, in the same manner we will be watching for response and the patterns that might be formed around it. Once we will get something, we definitely will try to take the position. Despite that, maybe market later will return to the upward direction and bread and butter will start from the high standing levels. But existence of the bearish patterns around these levels led us to take the position and make it a bit, make it not as risky. It's led us to protect our positions for the break-even stops and so on. When you have the patterns, it's easy to do. On the follow time frame chart, we do not have something special yet, so market is going up to the XOP 105.40 area. Right there is local target. And I think that in all this stuff, currently we could try to follow the channel pattern that is forming on the hourly chart. Since this pattern is already stands in progress, why we shouldn't use it? So, for instance, if the market will start moving down and retest 104.50 area, that's definitely an area that we could keep an eye on for a possible position taking, because this, first of all, the channel structure. Second, what is actually could be more important, is that it was disrespected broken confluence resistance, and market could just retest this level. So I think that we could start the week from the considering on the 104.50 area and see what will happen there. Probably it should be more or less acceptable to consider long entry around it. Week is promised to be really volatile, just because wobbling, just because we have the European Central Bank, we have the Fed Reserve. So it really could bring some surprise, especially in light of recent conflict between Donald Trump and Jerome Powell concerning the rates. We also, by the way, discussed this question in the report as well. So that's actually what we have currently here on euro currency. So as a bottom line, context stands bullish, response to 1 or 2 monthly support stands great. On the beginning of the week, since market stands overextended, we start from the observing of the 104.50 area, where potentially the chances for position taking might appear. By taking a look at the other markets, for instance, on dollar index, it's very temptative to get something of this kind, right? And actually, the same picture we have on the euro currency. It's really great shape, and it's a really big temptation to get it. And the same story on the 10-year bonds. So you can see here is we have the same hand shoulder shape. But I would like to remind you a couple of things. First of all, on dollar index, you have similar retracement swing here, and nobody guaranteed you that it can't be the 3 drive pattern to the upside. This is first moment. Finally, now I do not need this. I'm sorry. And if you take a look at the long-term chart, the quarterly chart of the dollar index, I would like to show you, and that you do not need to forget about it. So especially on the current headlines and speeches concerning reversal on the dollar, and that's probably rally is over and market will start tending in the opposite direction. That's what we have on the dollar index. We have 2 grabbers in a row. Recent retracement has been cancelled with this reversal upward direction, and with this ABC pattern to the upside, and both grabbers are just taken out with the stop. That's what we have. Yes, we could get here some retracement in reaction on the resistance that we discussed on the monthly chart, but currently it's definitely too early to speak about breaking of the tendency, and easily could be continued in the nearest time, because disproportions between the economies of the European Union, United States, United Kingdom, United States, Japan, United States, they are still stands in place. It's nothing disappeared, despite any tariffs or something. So that's our current opinion, and let's keep watching.